Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. I'm your host, Zen Sams. Coming up in our Crypto Frontier segment brought to you by CCP Digital, we are joined by Chris Pulley, CEO of CCP Digital, a decade-old digital advertising agency with unique access and knowledge in the blockchain and cryptocurrency industries. Today, he is joined by Mr. Jim Rao, founder and managing partner of Entoro Capital, an investment bank and advisory group for traditional and digital securities. Now, Jim has over 30 years of experience in capital raising, equity and debt securities, commodities and digital securities, and so much more. But we need to cap his bio at some place. And today we're chatting about the rise of digital currencies in our current environment and the rules and regulations surrounding them. Now, back in February, the Super Bowl was America's most watched television event of the year to date. And this year, the sector with the most advertising was crypto. The crypto ecosystem of digital money, non-fungible tokens, digital wallets, and trading platforms this year caught old Joel's attention with the release of the White House's new executive order. Its aim is to ensure responsible development of digital assets. And broadly speaking, the White House is seeking to strike the right balance from the positives of crypto, like financial efficiency, inclusion, American leadership in global finance, with basically its negatives: potential illicit financing, consumer and business abuse, and regulatory arbitrage. All bad things. Now, cryptocurrencies and digital assets offer huge value to financial markets if you think of it. Not only do they lay a foundation for innovation and technology that really reinvigorates the traditional makeup of financial services, they open the financial space for more affordable and accessible finance. And boom, this is something that the executive order acknowledges and encourages further exploration of. And here to chat some more are my experts at hand. Welcome to the show, my dear friends.
Thank you, Zen.
Thank you very much.
Thank you.
Well, welcome back, Chris. Nice to see you again. And thank you for making these segments even better by featuring experts in the crypto and Web 3.0 space. Jim, so excited to have you on, and congrats on all your recent success at Entoro. Okay, Jim, let's go back to speaking to the White House's executive order regarding cryptocurrency. Now, the order does not set out new regulations, but instead encourages the closing of regulatory gaps and encourages regulators to ensure sufficient oversight of the risks posed by digital assets. Now, there's no doubt that with this new exploration, we're going to see new regulations, or at the very least, the broadening of existing regulatory parameters for cryptocurrency. But from your point of view, why is it important to have transparent systems in place to truly have decentralized currencies?
Well, to me, it's very important because what we've had is a very unknown environment here for the last 4 to 5 years. In fact, companies have been trying to get guidance out of the U.S. government for, since probably 2013-14, and without any steering, et cetera. And it took forever just to get BTC to be deemed a commodity. And there's still a fair number of unknowns, but you can't really get a sector or an industry to grow unless you have some guidelines and standards. And hopefully we get that coming out of the U.S. government. Other governments around the world have been much more advanced and proactive in it. The U.S. has been a laggard and somewhat embarrassing, and we hopefully can catch up a little bit. It would be good for all of us.
That's very true. And investors are likely to get hurt if stricter regulations is not introduced. Plus, the IRS has an obvious interest in making sure investors, know how to report virtual currency when they file their taxes. And like most things with cryptocurrency, regulation does come with hurdles. So we definitely have a long way to go. Chris, I'm going to shift this to you. Let's talk about this crypto ETF approval. So there's already been a major breakthrough on this front, with the first Bitcoin ETF making its debut on the New York Stock Exchange this last October. And the development represents a new and more conventional way to invest in crypto. And the Bitcoin ETF allows investors to buy in on cryptocurrency directly from traditional investment brokerages they may already have accounts with, like Fidelity or Vanguard. Okay, so we see this in the equity market as well as in the bond market. So I guess people might want to hear, what do you say to this? Safe, unsafe?
Well, really, we've got the expert here on this call when it comes to the regulation and the security side. But from a generalist perspective, it definitely feels safe compared to the current investing environment that's available. So having it accessible through trusted sources and through regulated parties just seems like it's going to open up the ability for traditional investors and maybe the baby boomer generation with all the money to have access now into this new economy.
Yeah, very true. And, ETF approval has been in consideration by the SEC multiple times over the past few years, but BITO is the first to gain approval. So, some say that the BITO ETF is not enough because while the fund is linked to Bitcoin, it doesn't actually hold the crypto directly. And the fund instead holds Bitcoin futures contracts, right? So while Bitcoin futures follow the general trends of the actual crypto, it may not track the price of Bitcoin directly. So for now, investors must continue waiting for an ETF that holds Bitcoin directly, in my opinion. And this is something that, Jim could weigh in on even further when we talk about, what new regulations could mean for investors, Jim. So I'm going to segue a little bit because this is one of the most important questions that we pulled out of 500, but it pertains to the 1.2 trillion bipartisan infrastructure bill signed by Biden in November. It includes crypto tax reporting provisions that could make it easier for the IRS to track crypto activity among Americans. That's why experts say investors should keep records of any capital gains or losses on their crypto assets. Are we facing a crypto tax filing fiasco? And how does an investor lessen this potential IRS tax burden?
Yes, we are facing that. Just like if you were trading stocks or bonds, you need to keep track of your gains and losses in cryptocurrency. In fact, there are I know of at least 3 software programmer companies that have developed new technologies to manage that because they're a lot more sophisticated than just tracking stocks and bonds. So yes, it is going to be a train wreck. And at the end of the day, from the regulatory standpoint, it's less concerned. You got to remember, Uncle Sam wants his tax dollars more than he wants regulatory activity. So it's the tax dollars that are going to drive a lot of these activities.
Interesting. So I guess exchanges are going to have to issue like a 1099-B tax form with cost basis information to investors. And I guess ultimately, I do believe regulation is a good thing for the industry. It gives people more confidence in crypto, but I think it's something that we have to take our time and we have to get it right. Chris, crypto exchanges. This is something you and I have talked about a lot. Crypto exchanges have been historically opaque, allowing their operators to generate profits without accountability before governments or even their customers. And many exchanges have been accused of wash trading, front running, or freezing customer balances. So exchanges may have to register as broker dealers. You're very familiar with this. What do you say to this, in your opinion, from a business perspective?
Well, and again, with Jim here, I'm going to even volley back over there because we're deep in this regulatory component and then the operational component. Jim's been involved in this side and actually our resident expert and even our partner on our new Web3 venture fund. So Jim, why don't you keep going?
If you want me to feel, I'd be happy to field that.
Right, sweet spot. Yeah, go ahead.
Yeah, so you've basically got 3 major retail crypto exchanges. You got Binance, you've got FTX, and you've got Coinbase. So you have the 3 big ones, and there's a lot of them. There's probably 1,000 crypto exchanges around the world, and there's been plenty of examples where the trading gets going, the one thing leads to another. They can't fill orders, and they'll literally shut down for days. They're going to be shut down for weeks at a time. So there has been some serious issues when it comes to those activities. Now, the big 3, FTX, and they're all bifurcated too. Most of their activities are U.S. and then non-U.S. activities. So you don't get all the same products as you do on a U.S. exchange. You probably see 25 to 30% of what that Coinbase, like Binance would offer in a non-U.S. exchange. So there can be a lot of activities. Now, the reporting and everything as far as being BDs, etc. If you think it's bad from a regulatory standpoint in the U.S., there's literally another 100 jurisdictions around the world trying to figure out where they want to be. So at some point, there's got to be a global agreement on some of these activities. Now, what the market wants to see is some guidance, but not over-regulation. And in the U.S., we have a tendency to don't let a good thing go unspoiled here, and end up ramping up the regulatory activity so much that it ends up squashing the innovation of it. And that's what scares many people like myself, because our shop was early on in the STO markets 5 years ago. We did the first NFT as a security in the world. We want to see innovation, but there's nothing wrong with a little bit of regulatory guidance. So there's a balance.
Yeah, I couldn't agree more. And the SEC warned that it regards many cryptocurrencies as investment securities, especially those issued in an initial coin offering, right, an ICO. So, security trades are strictly regulated, so meaning that anyone who issued, sold, or even traded these tokens could be in violation of investment laws. And this leads me into the next question. And, while technology and trends change quickly in the blockchain space, security laws really don't. So this is both for both of you, right? What must investors be aware of to not get in trouble with the law? So from your legal perspective to say a company like CCP Digital that's at the forefront of all of these changes. Questions for both of you, my friends. Jim, you go first.
I'd be happy to. Look, it's in the US, you have a very different system. We have the onus is a lot on the issuer. Whereas many other jurisdictions around the world, it's on buyer beware, caveat emptor, right? So, but in the US, we have a totally different structure. So really it's the issuer's responsibility to make sure that everything is in a compliant nature. That does not relieve the buyer or the investor of being practical or doing the review, but the onus is really on the issuer. Now, as a broker dealer, we perform a service that actually makes sure that the issuer is in compliance before they go to a particular U.S. investor. I'm going to speak as a U.S. context. So if we could end up in a situation that is much more friendly to the issuers, that would be good. But if you're looking at whether or not something is a security or not a security, look, if you look back at the ICO world, those were clearly securities, and the SEC was correct on its July 25th, 2017, statement saying stop, and they were right. Those were securities. So, look, now you see things, and I would argue that about a third of the NFTs that are issued in the U.S. are securities. Now, they may not be securities outside the U.S., but as a security because they violate the Howey rule and a number of other. I don't want to go too deep in that, but they violate some of the securities rules.
Yeah, it's true. And I want to get Chris's perspective here. And just to circle back to that, this is for example, Ripple is now deep in litigation surrounding its XRP token, which it continued to sell on the market after the SEC issued its warning. And many ICO companies, to your point, have been fined or settled out of court. So, Chris, what are your thoughts here from the flip side of things?
Well, and you say from the flip side, so I'll speak from a blockchain and crypto enthusiast. I'm an operator in the industry. We're growing and developing and launching companies. And again, we started the venture fund here with Jim because of all of the opportunities and the ability to bring projects to the market properly. And that means legally, compliance, with all the business metrics in place. So what I'm witnessing as an operator here in the industry is the maturing of the industry, the bringing of some regulation to create some standards and safety. And it's a new world. So I'm fortunate to be in a place where I see both sides. I've got a 35-year career in traditional business, and now I've been really drinking from this fire hose for 5 or 6 years, and I've seen the depths because of our position, all of the great new exciting projects, and then I'm also watching the amazing businesses that are now transforming maybe a traditional model into a blockchain Web3 model and bringing the compliance and the traditional guidelines that we've used in the past. So it's a new world, but it's definitely a blending of the new culture and technology with the the regulations and the protections that are needed for a broader investment community.
Yeah, there you go. Well said. Well, we're out of time. Thank you so much both for joining. Jim, it was a pleasure having you on. Chris, thank you so much for bringing on these very, very enlightening guests. Always a pleasure.
Thank you. Thank you, Zen.
Guys, you definitely have to check out Entoro. Go to entoro.com. That was Mr. Jim Rao, founder and managing partner at Entoro Capital. And that was CEO of CCP Digital, Chris Pulley. That was our Crypto Frontier segment brought to us by CCP. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. We'll be right back after this. Welcome back, my beautiful friends. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. I am your host, Zen Sams. Welcoming back to our Crypto Frontier segment, we are chatting with Chris Pulley, CEO at CCP Digital, and Jim Rao from Entoro. And we're picking up our conversation about the crypto regulations and what this means for investors. Now, Jim, stable coins may face greater scrutiny, and another likely focus for regulators is stable coins right now, blockchain tokens whose value is pegged to the dollar or other fiat currency. Okay, so most stable coins back their peg by keeping large reserves or cash, treasuries, or other low risk assets. Will stablecoins attract the attention of the SEC since the commission considers crypto exchanges as de facto securities brokers, which means the majority of stablecoins trades are also securities transactions? What do you say to this?
Oh, absolutely. So not only is it going to attract SEC, it's going to attract CFTC and other regulatory bodies in the United States. And in fact, there are 4 different types of stablecoins. Fiat is the primary one, and you can have commodity ones, etc. And historically, they were backed 1-to-1. So 100 USDT was backed by US dollars, right? And that is actually diversion. Now they're going into liquid securities, etc. So will they be under scrutiny? Without question, and they probably should be, and because effectively they're a digital dollar.
So, Chris, knowing where we're headed on the regulatory side with the regulations and the way that we are now essentially merging TradeFi and DeFi, what kind of investment opportunities do you think lay ahead for investors who are really looking to take this extremely seriously?
The investment outlook is phenomenal. The innovation that we're seeing coming through the industry itself, with the innovation of the blockchain developers and the technologies, but also with the traditional business worlds, specifically in the U.S. where I'm operating, with phenomenal projects and executives that are bringing great ideas, even things from the past, right? Things we've seen were tried in the maybe the late 60s and 70s. From a creative perspective, can now be deployed because of the technology. And the investment outlook, I think, is extremely exciting, as even we've partnered with Jim to help bring some projects to market in an investable form that can have, that investors can have access to in a more traditional way. As we found, one of the challenges from anyone on the outside trying to look in is trying to understand exactly how value is being created and literally sometimes what's going on. I mean, we just had the, people paying hundreds of thousands of dollars for gas fees so they could buy a little piece of land to be part of the Bored Apes virtual world. And I don't expect anybody from an investor perspective to get that, invest in that, ever feel comfortable. But the projects generating real value and bringing things to the retail public, there's a big investment pipeline building now.
Yeah, there's definitely, I see it happen. It's unfolding right before our very eyes, and Web 3.0 is coming into full force. And I always tell people, the only fear you should have is not being part of it, because this is where we are headed. And then, this is another trending question, and I'll revert back to Jim, and you can answer this too, because I know that, Chris, you and I have had conversations about this, but new tokens right now are facing may face regulation. So although the SEC has directed most of its enforcement actions against ICOs, recent years have seen the introduction of new types of blockchain tokens, from decentralized lending to non-fungible tokens. And many of the new projects appear to sidestep existing regulations, either by working without a central operator or because the tokens represent something, innocuous, like in-game objects or digital artworks. Jim, can NFTs be subject to securities laws if they are purchased as investments?
Absolutely. Just because somebody's issuing, they believe is an NFT, which really should be called an NFA, non-fungible asset, instead of token. Token is usually reserved for equities, but in the concept of an NFT, and we'll go along with, you can have all the features of a security. You may call it an elephant, but it may be a duck, and the SEC is going to say that's a security, and it doesn't matter how you frame it. It's what the underlying aspects of it are. So what makes it a security is if it has an option to it. It has cash flow, aftermarket cash flow opportunity. There's a number of things, I don't want to go into it right now, but there's a number of things that make it a security. If you're just selling a simple print, that is not that's an asset, not a security.
Got it. So people have to really be careful here, and they have to have a really deep understanding of what they are purchasing and what this entails. And at the end of the day, how they're going to be taxed on this. Well, that's another great segment. Chris, thank you so much for bringing on Jim. Jim, it was so enlightening talking to you. Thank you so much for all the information you've provided us today.
Thank you, Zen.
Thank you.
All right, guys. Overall, Bitcoin is a good indicator of the crypto market in general because it's the largest cryptocurrency by market cap, and the rest of the market tends to follow its trends. Institutional adoption means for investors, that's where we're headed right now. And it's paying for things in cryptocurrency that we are going to start to see more and more of. So we are definitely headed into the next phase of Web 3.0. That was Chris Pulley, CEO of CCP Digital, and Jim Rao, Entoro.com. Definitely check them out. You're listening to A Moment of Zen right here on 710 WOR, the voice of New York. We'll be right back after this.